Hello, and thanks for joining us today. I'm super excited you could be here. Look, today we're going to help you get funded. We're going to help you get funding through a solution that's been around for a long time, and an actual company that has a really good reputation in the space has funded billion plus dollars in funding for small business owners, really understands the challenges that small businesses go through and the fight and struggle to get capital, and solves a lot of that by just giving you an easy path to get a multitude of different funding options to be able to actually fund your business when you actually need the money. So with us today is Tim Magis. Now, Tim is the CEO of Expansion Capital Group, ECG, where he helps businesses secure customized financing solutions to support their growth, to support operations, and also long-term success. So with extensive experience in commercial finance and equipment leasing, Tim actually works closely with companies across a variety of industries to structure funding solutions tailored to their specific needs. Now, under his leadership, ECG has built a strong reputation for providing flexible financing options and helping businesses navigate the very complex funding challenges efficiently. Now, Tim actually brings a practical and relationship-driven perspective to business lending, capital access, and strategic financing as well. His perspective would be especially valuable and is valuable for all of us to hear about how they really simplify the process of business owners getting capital. So, Tim, thanks for joining us today.
Ty, pleasure. Thank you. That was a long intro, probably too long, but I appreciate you having me.
I skipped a lot of the best parts, man. You've been in the space doing a lot of really good stuff. So
it's been a ride and a journey. So
how long have you guys been around?
So Expansion Capital started in 2013. So we've been around 13 years now this July. Prior to Expansion, I would spend time in banking and then spent a handful of years in kind of the SBIC small business lending ecosystem, and that was really where I really saw the need for kind of what ECG does. But yeah, when I joined, we were pretty small, but we've grown pretty significantly. I think to date, I think it's like over 1.7 billion to small businesses in this country. I think right around 40,000 small businesses that we've helped and impacted. So it's been a ride, it's been a journey, but that's a quick high level history on us.
I love that. And at one point, that's a lot. I mean, almost $2 billion in business financing. So I love talking to you, and I love what ECG does because I think we're passionate about that same problem, which is helping an underserved business owner, somebody that's really struggled to be able to get financing and fix that problem. But I want to hear from your perspective. You specifically mentioned the founding to solve a problem. From your perspective, like, what does ECG do? What problem are you mainly solving?
Yeah, I mean, look, I think a lot of people talk about the 08, 09 downturn, where I think the regulatory burdens that were put on banks and traditional sources of capital was really impacted. I think that's point number one. But I think really point number two, what I try to break things down, right? I think you're a small business owner. We've historically been a small business. I still think we're a small business, but at the end of the day, right? Like, small business owners are trying to put out fires day in and day out. And really what we did coming out of COVID is we really got laser focused on kind of the tech data analytics piece of this to really drive as much around what I talk a lot about, and that's speed to approval and certainty to close. And what I mean by that, right, is a small business owner, right, they're trying to deal with marketing initiatives, they're trying to deal with operational challenges, employee challenges. Like, raising capital is not necessarily front and center Monday through Wednesday, every hour of the day. And so what we've really gotten to, like, our speed to approval, we've layered in technology. Most of our approvals are out because we can access and aggregate the data more effectively today than we could 10 years ago. I think last month, our average approval time was in 38 minutes. Once the application and bank statements hit our system. But then the counter to that, right, is it's easy to put out an approval, but we've invested so much time and energy on the front end of that approval that's where I come back to the second piece of that, right? A business owner wants certainty to close. Don't tell me that you approved me and then retrade the deal or change the deal, 1 day later or 2 weeks later, because I'm counting on you because I've got employees that I got to deal with. I got a new project. So I think our contracts into close ratio right now is like 83%, which is pretty significant. I've heard some in our industry are sub 50 because they haven't invested on the front end technology. So we're really about kind of speed, service, and trust, and again that speed aspect of it, as well as the certainty to close. Those are just two things that talking to business owners, that's what they struggle with, right? I need to get the capital. I want to get it done. I've got this project. I got to execute on it. I've got a new customer. I got to get them onboarded. And it's really just giving them the peace of mind at night to where they're not going to worry about, I got to raise capital. I'm going to spend 3, 4, 5 months doing it.
Yeah, I appreciate that that's what you're passionate about. So speed, and it's important to note that this isn't a pre-qual, and I'm not saying it's 30 minutes. I'm not trying to put out there that this is what's going to happen, but that, let's say you're averaging less than 40 minutes, which you are. And it's important to note that's not a pre-qual. That's a physical, actual, real approval. It's not somebody where you say you may get this. That's actually telling somebody you are approved to get that, and typically on average less than 40 minutes.
Yeah, it's approved. Typically, the things that would counter it is, if they move forward in the process and something happened over the next day or week with the business that we become aware of, or we've seen sometimes where they take funding from another provider that same day, and when we kind of recheck the bank links through Plaid or through some other sources, us providing that original approval from maybe 3 hours ago all of a sudden becomes a burden on, in our view, it'd be over leveraging the business. So again, those are few and far between. They do happen, but again, we stick by, 82, 83%, contract to close ratio, which from what we've gathered in our industry, at least is pretty high.
Yeah. And that, I mean, it's really, really high. And for those watching, what Tim is nicely trying to say, because I've been in lending for decades, is the other 17% is just stupidity. That's what I've seen. I've seen people do the dumbest things I've ever seen people do before they close a loan. And I'm like, you've got to be kidding me. That is crazy. And I own, a mortgage company. I was on the mortgage side. I've been on the lending side and the business side for a long time. So just so you know, for clarification, it's people do really stupid things before they close. You won't say.
I mean, look, I think you're doing a great job of educating, and look, I think that's why we're passionate about the small business ecosystem, right? I mean, this is where most of the job growth comes in this country. And again, somebody that's built their business, they're typically not a finance person, right? They're not an ex-banker. They typically grew up in an industry, running a business, building a business unit, and their probably expertise is on the customer, the sales side, or the operational side. And it's so I think part of it, like, we owe it to the small businesses in the country to, educate as much as we can.
Yeah, I love that. So who can you help? People are watching this right now wanting to know if you can help them. So what's the type of borrower that you can help with the financing options you have?
Sure. So I'd like to say that we're a generalist. I mean, we pretty much do most industries. The type of bar. I mean, look, if I could just name our top handful of industries, these are restaurants, retailers, construction companies, small healthcare companies, construction subcontractors, truckers, and typically we're providing capital. On the low end, we go as low as $5,400. On the high end, we go up to $500,000. And what's unique about us, again, on the tech side, is I think you mentioned it in the intro, right? Customizable offers. We have sliders that are made available. So what we do is we offer like what we call max offer. Like, basically, we think over the next, 6, 9, 15 months, we do go with 15 months right now is our cap in terms of payback period, in terms of how far we go out for term. But we've got these sliders on this tech-driven aspect where they can customize their offers. And so they can say, hey, like, I don't necessarily need this much money. Appreciate you giving it to me, but I only need this much. And then, on those sliders, our rates lower. They can play with the term and get lower rates. So that's the customizable aspect. But those are the industries, 5,000 to 500,000 dollar wise. I talked about term. I'd say the only other thing is we have pretty aggressive prepaid discounts. Typically, I think our minimum offer right now is about 5 months, but we do see business owners that are like, look, this is really just a bridge. I only need it for a month and a half. We do have pretty aggressive prepayment discounts in our contracts, so that for them it's just an opportunity. Like, hey, you have access to the capital for 5 months, but if you pay it back, then it's even cheaper than than what's originally outlined. So that's probably the high level on kind of our market and that. And again, I think the last thing I'll say, most of these are service businesses. Ty, we spend I think I mentioned cash flow underwriting. Um, Most of these are going to be asset light businesses, not heavy collateral. Obviously, the industries that I mentioned are more service based businesses. And that's really where we see the void, right? That's the banks aren't going to do anything there. And other alternative or more traditional sources. It's just those aren't areas that they play because they don't have the collateral to back it to prove to the regulators that there's a secondary source of repayment.
It makes a lot of sense. So asset light, so not really collateral or asset based. A lot of different kind of industries, service based industries, but we talked about a lot of different kind, even from transportation in the mix. So you can help a lot of different industries. What are you primarily looking at? Are you looking at revenue for main qualification? Is it credit? Is it both? Is it other factors? Like, what are the main things you're looking at to determine if a borrower can fit your criteria?
Yeah, I mean, look, I think I think one of the fallacies in this space that I would want some of your audience to know, like we've got a pretty deep analytics team, and we really don't look at personal FICO. I mean, we still pull the Experian report for other items, but I would argue some of our best businesses that we financed over the years, the business owners got like a 520 FICO or a 580 FICO or a 620, right? Like you don't have to have a 780 FICO to get SMB lending. So what does that mean for ECG? That means that we start primarily with what I call cash flow underwriting, right? We do, and again, that's the revenue and the expense side, looking through bank statements. Again, those can be PDF bank statements or automated through like a Plaid link or things like that. But the data gets downloaded and it gets reviewed in nanoseconds by some of the models that we've set up and some of the technology that we've set up. And ultimately it comes down to, right, like we've got a pretty good assessment based on the industries where the margins should be. We get an assessment of what's going, in and out of the business from a cash flow perspective on a daily, weekly, monthly basis. And that's a large part of it. Obviously, there's other factors within that, like, average, how do they manage the average daily balance on the account? Are there 20 NSFs in the account? Do they manage the business poorly? But those are all factors that get embedded into some of the risk scores. The other things that we'll look at, I mentioned the credit report. The area that we will look at is, what they call trade lines. Just does the business owner have 5 other credit cards that are all really ramping up, and are they delinquent on one? Again, we're not necessarily looking at the FICO score, but we're looking at, how are they managing their other debt obligations, whether they are business or whether they are consumer. And then, a lot of the other stuff is kind of what I'd characterize as more not necessarily specific data, but things around the industry, things around the trends in those industries and so forth.
Yeah, it makes sense. And you've developed your own proprietary tech. Sounds like you've been working on that for, I don't want to say decades, but I mean close to, for the proprietary algorithms to be able to kind of determine, looking at those things, what makes sense or what's not. And that's why you can come up with a proof.
Yeah. So my anecdote on that comment, Ty, you're 100% on point. We got really aggressive on developing the tech, the data, and the analytics side during March, April of 2020 because we basically shut down because most small businesses in the country were shut
Sure.
down. So we had plenty of free time on our. I mean, look, I joke with my team. I'm like, man, that was the worst 3 to 6 months of my life from a professional perspective. But, you look back in hindsight, and I don't think we would have made some of the strategic moves to really focus on like, hey, how do we make the small business customer experience better? Why we're not funding, like we're not doing anything. So what do we need to do to make the small business? So there was a lot of investment, time, and energy during that time frame. And then naturally you evolve and you layer on that as time goes on.
Yeah, I love that. And that it's a good use of time. It's great use of time. I went through that, and then I went through owned a mortgage company during the mortgage crisis when that whole thing collapsed. So I remember
Yeah.
those times very, very clearly when things got completely disrupted. So what kind of funding do you guys offer? Like what kind of funding programs do you have available for a small business owner?
Yeah. So there's two pieces of our business. The 1.7 billion that I mentioned is all of our on balance sheet capital, working capital that we've provided. So there's really two core products there, and a lot of that's state specific. The one thing I'll mention is unlike a number of players in the kind of fintech, small business ecosystem, we do both a loan product, a working capital loan product, as well as a revenue based financing product. And the loan product is under two specific licenses. We're licensed in California and South Dakota through through I think it's the Department of Financial Institutions in California and the Division of Banking in South Dakota. And so that allows us to do the loan product in, I think it's about 39 states right now. And then the other 11 states, we do the revenue based financing product. Again, both are underwritten very similarly. I think you and your audience probably knows some of the differences, but on the revenue based finance product, like we have I guess it's what's referred to as a reconciliation payment. So there's opportunities for variable payment structures. So in other words, the easiest example is if the restaurant's revenues are down 50%, next month, then we lower our payments 50% because it's a percent of the revenue. So that product, I think it does create a little bit more flexibility for the business owner, which I think is good. I think it's a great product. But those are the two core products. But again, it ultimately comes down to, right, I'll say collateral. Our collateral is really the cash flow of the business. So we want to see the business do well. We want to see the business be able to pay us back, obviously, and obviously most of that's on balance sheet. We do have a small brokerage arm. I would say it's 3 to 5% of our business. It's not huge. Where for those customers that come to us, that maybe they're looking for something a little bit different. Like last week, we just closed a $300,000 SBA loan through a partnership that we had. So again, we don't hold that loan on balance sheet because it's a different product. There's some uniqueness to it, but we do help. Look, we just want to help business owners. So we've done that with SBA. We've done it with some line of credit products, which we've done, and we're looking at rolling out a line of credit product in 27 probably. And then we've done some things in the leasing world as well. But again, those are not contracts that ECG puts forth. We just facilitate for the business owner to help them kind of find the best option available.
Yeah, I love it. So even if somebody doesn't fit into your loans, your revenue lending, your core products, then you've got a way for them to go to still be able to get help through other options that may be available.
Yeah. Yeah. And look, our hope there obviously is, um, you hope you help them with a leasing product that solves their problem now. And then maybe they remember that when maybe it's more applicable that they need a working capital loan, a year from now, and they come back and say, hey, ECG, Expansion Capital Group helped me with the loan product or the leasing product. Now I'm going to go back to them and see what they can do for this. So,
Yeah. Which I wish it was the way it was. I wish you all watching this were more loyal than what you actually are, because I found that it's easier if you can find a company like ECG that has a lot of different products and that works with you and helps you find solutions that might not even fit the main product. If you're staying loyal there, working with that finance team, then it just seems like you can get more done and then get more financing options and be aware of what's happening when new funding becomes available. So I wish more of that loyalty was there, but I love the fact that you have a solution to help those people that even you can't help, to make sure that every small business owner has a chance of getting the capital they deserve.
We'll I'll add on to that, Ty. Sorry, I don't mean to, but I'll interject. We have and I don't know the exact number, but I will tell you this: we have one customer out west. It's kind of a service installation business. I think that they have. So I think they started with us maybe in 2014, and they have taken out funding and paid it back, and then taken it out again and paid it back. I think they've done that 22 times in the last 13 years, or 12 or 13 years. Again, it's a project. It's kind of project management, right? He wins a bid on a contract and he says, okay, I need $200,000 for this project. I'm going to go tap into ECG, buy materials, do some things. And then he finishes the project and then he gets paid, 90 days later, and he pays us back. But the reason I like telling that story is we have asked him, because his business, he has 4x his business. I think he was like a $4 million revenue business when he started working with us. And now he's, I think, 15 to 20 million in revenue. And we said, hey, like, you're bank, like, why don't you go to a bank? Like, you're bankable now. And he says, look, like, I've developed a relationship with you guys. When I have the project and I know I've won it, I call you and I basically use you as an ATM. Like, you give me the money within 72 hours and I don't have to worry about it much, right? I just go on then with the project and I execute it. I bake it into my bid, and it's just an easier process. And again, it comes back to, right, speed to approval, certainty to close. So just an interesting, like, again, I'm like, why he should go to the bank? Like, it'd be cheaper, So anyway.
No, I love that. I'm from a small farm town. My dad was a banker in the town. And, I just grew up with these, stories of, like, handshake deals between farmers getting capital. I just think it's the coolest thing. I teach that with business credit building too. It's like Quill, might be the first one to give you vendor credit, but don't abandon them when you can get Office Depot. Like, these are the people that were there for you when nobody else was. I have found in business, I'm sure you have too, that those are the relationships you want to keep. And I tell people that they try to get me to switch my merchant account or whatever. I'm like, loyalty is worth way more to me than like the little bit of money that you may save, or even a lot of money that you'll save. So I love those stories. I think it's just so powerful. And honestly, that guy. Like, you're the CEO, that guy. So when he needs something done, he does have a better chance of building a relationship with you to be able to get things done than he'd ever have at a banker, where that front end banker doesn't make the decisions anyways.
I think his first funding with us was like 40 or 50,000. In the last, I know it's happened in the last 3 or 4 months. He had a new project. He was one of our 500, our max offer, 500K, situation. So he's grown with us, and we've grown with him. So
yeah, I love that. That's just, I have a lady that had a tow truck business, came to us for 80K. We got her 8, and then she bought a tow truck, doubled the business, and bought a fleet. And it's the most rewarding thing of what we do, is to sit there and watch like that one person start and then grow it into something cool. Like, they got a $15-20 million business, and you guys helped him grow that. And it's just like, it literally has my hair on the end of my arm stand, because it's just, that's the coolest part about what we get a chance to do.
Yep, exactly.
Yeah, so I love that. I love that you guys have, and it goes to show the power of what you do and the relationships you build, that people are staying with you again and again and again, even when they get bankable per se and can go somewhere else. But that ties into, what is the experience like to work with you guys? Like, if I come to you and I'm interested in getting capital, like, from my perspective, what would I do and what would the experience be like for me?
Yeah. So so first of all, you'd coming direct to us, you'd apply on the website, www.ecg.com, Expansion Capital Group. So go to ecg.com, and really it's just an application, upload bank statements, and then one of our sales representatives would reach out and engage with you. A lot of times, if all the information's in through the application process, when they're reaching out, they're reaching out with an offer. So that's relatively quickly. And then from there, like one of the things I like to tout because we just rolled it out 3 months ago. One of the things that we heard loud and clear the last couple of years is we used to do like a funding call, but like once the business owner's approved, there's typically a handful of what we call stipulations or diligence items that need to get pushed in, that the business owner would work with the sales rep. But our closing process, we recently rolled out online checkout. So we used to do a funding call, and what we heard right was, hey, the business owner is busy, right? Like you want me to do a funding call to get kind of final sign off. I thought I was done. I wanted the money in my account tonight or tomorrow morning so I could move forward, but I was on a construction site. I couldn't do the funding call, and then I couldn't get to it tomorrow, so I had to do it the next day. Well, we over the last part of last year, we built out online checkouts. Now the business owner, like they don't on the back end funding to finalize it, they don't need to speak to anyone. We have online checkout. They go in, they click the link, they answer, know your customer, know your business, KYC, KYB questions. They sign the contracts. They go through a couple of other, I think they have to upload their driver's license for that. But literally, like business owners are now closing with us, like when they're at the airport, just on their mobile phone, and it's mobile phone friendly. So the back end of the process, which we hadn't really talked about earlier, we've really streamlined that around this concept of what makes it easiest and self-serve for the small business owner. So again, once it's ready to go, like they can close it at their leisure and just do it on their mobile phone. It's very quick, it's very slick. We're very proud of that. But back to the piece of your question that's probably most interesting for your audience is look, you would work directly with the sales rep. They would lay out the options. That would typically be done same day or next day if like you apply late in the afternoon or at night. But we'll lay out the options and then work with you. And then when the business owner selected, yeah, let me go with this one and close it. And if it's us closing it, it's not one of those external deals that I talked about. We'd more than likely run you through the online checkout process, and it would be quick and easy.
Yeah. Tim, I love it. I love what you guys have put together. Your reputation in the industry stands for itself. There's so many things you're doing innovation wise that have been done for a long time. But I'm interested from your standpoint, what is it you like the most? Like you guys are doing so many cool things, but what is the thing that like makes you the most excited and most happy of where you guys are right now and what you're doing?
Yeah, I mean, look, we talk a lot internally about impact, and we looked at some stats, and look, these are estimates. It's difficult to get this, but on average, one of the things I didn't probably mention, most of the businesses that we work with tend to be six months time in business out to probably 7 to 10 years. Right now, certainly we have some longer than that. But most of those companies have between 2 and 75 employees. The thing that gets me excited, that impacts me the most is, we looked at the average number of employees across our small business ecosystem that we've provided that 1.7 billion to, and it's somewhere between 400 and 500,000. And the reason I tout on that, right? When you look at the stats, everybody talks about Nvidia, Amazon, Walmart, right? But I think it's like 65% of the job growth in this company or country is typically from small businesses. And so for me, like the thing that excites me is continuing to kind of help more and more small businesses. Like I keep looking forward to when the 40,000 small businesses we've helped is 100,000, and I can say, hey, we've not now only helped 400 to 500,000 employees with that business we finance, but we've helped 1 million or 2 million, team members at those companies. Again, I just keep coming back to, like, if you really look at the stats and the underlying economy, that's where most of the job growth in this country is. That's what kind of makes it run. And given we're in Sioux Falls, we talk a lot about, trying to help Main Street. There's obviously a lot of noise in the press about that, Main Street versus Wall Street, but that's really where we spend a lot of time, talking about. That's where our passion is.
I love it. Tim, thank you so much for coming on with us today.
I appreciate it. Yeah, it was great, and wish you the best. Thank you.
Same. So listen, you're watching this, you need to check out ecg.com. It's interesting because when I start these interviews, I always have a good back and forth conversation before the interview starts. And I never record those. And sometimes I wish I did, because you could tell so much of the character of the person you're interviewing and what the company that they represent based on what happens there. One of the things I love today, especially about Tim, was him talking about how he really wants to solve this problem of helping business owners get capital that have struggled to get capital, and how he listens to his customers and audience about what they're looking for and what will help make their business easier, and what they don't understand and what they need to understand. And so if you think about that, imagine all of our frustrations as small business owners solved, and then an easy, simple process just to get capital is the result. That's exactly what ECG literally has created. I mean, it's super fast. It's super easy. You go to ecg.com. Right there, it says apply for funding. While you're there, look, my favorite part of their website is there's this guy that says ECG. It's like Superman pulling a shirt back. You have to see if you can see him in the header. You're only going to know if you go to ecg.com. So you got to check it out. That's my favorite thing. You got to see if you can see this guy. And right below him is apply for funding right on the center. It's a super easy process. It takes minutes to go through. Once you go through, you can even upload your stuff, so you don't have to send a bunch of documents. You can even go right into Plaid. And then you're talking to a finance team member. You're talking to a finance specialist, and then they can actually help you understand your options. And literally in less than an hour, you could be approved, and then you could fund oftentimes, I think, in like one day, sometimes a little more, sometimes a little bit less. So it's super easy funding. And it's funny because even when Tim was talking about that funding call, that's annoying. Any of us have got money. We understand that's annoying when we think we're there. Then we got to jump on one more call to like say a bunch of stuff that we don't have to just to get the money. These are the type of barriers that ECG has removed, and they can do it because they're a lender, not a broker. They're directly lending their money, so they understand their customers, remove the barriers, and make it simple, easy, fast for you, and offer multiple different funding products all under one umbrella. So it's easy to get approved. Go to ecg.com. When you're at ecg.com, do two things: apply for funding, and then go to the bottom of the page and just take less than a minute to subscribe on their social channels. They've been around for a long time, so they're constantly putting information out there about what's happening in the industry. And if you want to be in the know, all you have to do is go down, take less than a minute to subscribe, and like those channels. So make sure you go to ecg.com to apply today. Thanks for tuning in. Take care and have a great day.